Hi everyone, and welcome to another episode of Value Investing Talks, where we discuss finance, business, and value investing. I'm your host Eugene Alexeev, and I bring with me over 10 plus years of experience in running my own businesses. Some of them were sold, and some of them I run nowadays. Additionally, I am the founder of numbfin.com, a comprehensive stock research tool for public companies. At Numbfin, we cover over 60,000 companies listed on 70 plus stock exchanges worldwide. Our platform provides information in 25 languages, offering insights into finance, management, company ratios, and other essential facts. You can find the link to our website in the description. It is also important to note that all the information shared on this podcast is intended for educational and entertainment purposes only. We do not provide financial advice. So sit back, relax, and let's dive into the world of investing. Hello, everyone, to all our viewers and listeners, and I welcome you to the next episode of our podcast, Value Investing Talks, where we speak about different asset classes and different ideas about value investing, specifically in public, private equities, and in real estate as well. And today, our guest is a good acquaintance of mine, is George. Hi, George, and today we will speak about the Dubai real estate and the new trends, the new situation which is currently is in the world due to primarily the tariffs from the United States and all this unstable economical and political situation. Hi, George.
Hi, Eugene. How are you?
So far, so good. Thanks. What about you? Haven't seen for a while, and what's on your side right now?
All is well, and thank you very much for the second continued podcast efforts. It's always a pleasure to meet you and share my knowledge and exchange ideas and learn from you as well. So I'm looking forward to it, and things have been pretty well. And in fact, it has been busy in Dubai because Dubai is buzzing with a lot of real estate transactions and investors coming into Dubai and establishments and companies coming down to Dubai and setting up their offices and their businesses. So yes, overall, it's been a very productive year. Thank you.
Yeah, that's fascinating. Those people who watched or listened to our previous episodes, they probably are familiar with you, and I will put the links for the previous episodes in the description. But for the new listeners and audience, it would be really great to learn more about yourself and how you have come up to the Dubai and primarily real estate world, and on what part of of the journey you are currently now.
Great. Say, my journey into Dubai's real estate space wasn't linear. It was more on a macro-driven concept where I was advising in technology and consulting with corporate companies around the world. And that's when I started noticing a shift. And say, capital was getting restless, right? So investors wanted out of overtaxed, overregulated, and overpriced markets. They don't want to stay there any longer. So Dubai, on the other hand, was emerging with clean regulations, dollar peg stability, and luxury property at a third of the cost of global cities. So that was the pivot point for me, where I started helping clients who were previously focused on other cities like New York, London, Singapore. And now they are asking, and they were asking, can we do more in Dubai? So that has been my journey into the real estate advisory world.
Got it. That's really fantastic. And I'm sure that all the clients are satisfied and happy with your services and help. And my question here is more about the your general experience. Do it really help having the different skill sets in terms of the media coverage, the knowledge about the real estate, the consulting, the some law factors in the Dubai in the situation where you have the specific task of to offer the valuable investment for the future investor, the future client of yours?
Of course, when you come from a multifaceted experience, say, for example, when I was consulting in tech, I learned how to spot patterns at an earlier stage. So in consulting, I was trained to simplify complexity and complex situations. And while I used to be in the media industry, the events industry, I mastered how to earn and sustain attention because today, sustaining attention is something that people lack. And today in real estate, I bring all these experiences to the table. So I decode market signals, break down deals with as much clarity as possible, and communicate value in a way that builds trust and drives action. It also means I can speak the language of probably most of investor class, where whether it's a startup founder or a family office or an individual investor or a corporate executive, because I've walked their shoes, I've been there, and this cross industry experience does help in real estate sector today.
Great. I definitely agree with you that having multi-level knowledge from different industries really helps. It also helped me when I'm working with my investors and different investment deals, because having a decade of experience in IT and understanding, and as you said, being in their shoes and understanding their exact problems and demands really help to reveal these pains and passions in terms of the specific deals and bring the better solution for them in general. And my question here more in terms of the more connected to the investors. So basically, as I understood, you can work primarily with private and public investors as well. And are there any differences from your side working with the specific types of clients? And what do you think? And what are your focus on which type of clients you are focused right now?
See, currently I'm seeing a real mix, but the fastest growing group is the private capital entrepreneurs and the professionals, and also the multi-generational families, right?
Yeah.
Now, all of them want yield, they want safety, and they want global flexibility. Now, for example, family offices often look for a luxury or trophy assets, right? However,
Yeah.
an entrepreneur prefer value play investments, like locations like downtown or Business Bay, where the prices are still hovering around $600 to $900 per square foot. By the way, that is less than a third of what these entrepreneurs pay in London or Singapore or other comparable locations, right? So the global appeal lies in this simple math: prime real estate, full ownership, tax-free income, and a global lifestyle all under one roof. So it is a mix of investors. But as I said, the fastest growing group is private capital, entrepreneurs, and professionals.
Yeah, understood. And these are primarily people who understand the value of the time, of the money, and they understand how to utilize and invest, in most cases, in, as you said, comfortable and yielding assets. Because even from my experience in working with different people and from different locations, I understand that, of course, you have multiple choices by investing in Europe, America, US-based private businesses or public equity. But in most cases, according to the current statistics and trends, they can be rather volatile, because if you speak about the private equity, for example, in most cases, as a classical approach, you need to raise money to purchase the business or create some kind of the creative deal. And right now, it's more and more hard to raise finance for purchasing the business. As a result, most funds are lower their yields in terms of the results for the investors. And the same is going with public equity, because due to all these tariffs, and we all know the situations where we have like ups in 50 to 100% tariffs for some countries, for some sectors, and the market can be down like to 5 to 10 to 15% in one day. And these are the huge numbers. And basically $4.7 trillion were out from the market at that day. And we all know this situation. And when you consider as an investor different types of assets and classes, especially like the real estate, I think that Dubai can be really interesting and valuable opportunity, because there are a lot of opportunities there and hidden opportunities in general.
Sure. That is true words, Eugene. As you mentioned, today we are in a very volatile and an uncertain,
Yeah.
tremulous times. We don't know, a single tweet can change the market. The market can go down below, and it could be a V effect too.
Yeah.
So yes, you said it all right. Today we are in a very unprecedented and a very volatile economic fabric. So we would have to analyze, especially investors that we work with, either private or family officer or institutional. Today, they want something emotional, tangible. They want to feel secure. Safety is the first thing that is in everyone's mind today, and you
Yeah.
said it perfectly.
Yeah, definitely, because it's just the overall mood of the market right now, especially with the tariffs and all this current economical, political situation in Europe and US in general. And my question here is more about the general trends, because after this situation with the raising of tariffs, have you discovered or have you noticed any specific improvements in flow in the in the real estate sector in Dubai, or in general in real estate, based on this situation?
Excuse me. Absolutely, because this is a very tremulous period, as I said, and it's certainly a turning point for investors, especially from North America, Europe, and Asia. Now, they have been calling us with a very clear goal that they want assets that aren't in the crosshairs of geopolitical chaos. Now, Dubai has emerged as a neutral dollar-linked tax-free safe haven. Why we say it is because the inflow wasn't speculative, it was very strategic. And many of these early movers have now doubled their capital post COVID and are securing somewhere between 7 to 9% of yield every year, which is a very great place to be given the trade war happening, the global stock markets are dropping sharply. As I said, a single tweet can wipe out trillions of dollars in the world. We need security. And Dubai is emerging as a very strong player, not caught in between the crosshairs of geopolitical chaos.
Mhm.
And it's real estate at the end of the day. People have something that they can touch, feel, and even live in tomorrow. And it's easily liquefiable today in terms of an asset class when it comes to Dubai.
Definitely agree. And if we speak about the statistics, of course, there were times where when the private markets and public markets were higher in yield rather than real estate asset class, like in 2024, 23. But right
Mhm.
now, in most cases, the yields from real estate are a little bit higher and more safer rather than private and public equity revenues. And do you think this is the main driver and can be the main reason why most people consider this as the safe haven? Or are there any other specific types of the advantages of real estate in terms of the decreasing the risks and understanding the decreasing this uncertainty which is connected to other asset classes?
Now, Eugene, volatility acts like a trigger, right? So when the S&P 500 swings wildly or a rate hikes spook markets and investors who are looking for calm ground, then the only safe haven that they turn around is to real estate. And currently, with the given historical data of foreign direct investments into Dubai real estate, especially, we can see that Dubai is no longer the global narrative of Dubai was, is Dubai safe? Now it's no longer the case, right? Now people have moved from is Dubai safe to an era where they feel a level of safety and return. And they are understanding, okay, in an era where inflation eats into the returns and public markets and public equity are driven by trading and fear cycles. Investors, they can buy a high-end apartment at $700 per square foot in Dubai versus investing in a public equity that can wipe out millions or hundreds and thousands of dollars from their investment. And also we are looking at portfolios that are being diluted and diversified, where people are going with a 50-50 mindset, where the 50% is their risk appetite and 50% today is to gain peace of mind. So when we talk about private equity and public equity and their behavior in the market being very volatile,
Yeah.
now certainly the investor mindset has been altered to think about safe investments. And real estate is always a safe investment because it is an emotional investment. Unlike you looking at a screen and seeing the needle go up and down, here you can sleep peacefully knowing that you've invested in a real estate and there's a real tangible asset that is safeguarding my investment. Correct? So that
Yeah.
way, yes, we observe the investor behavior change drastically where they're moving capital from equities into tangible assets like property today.
Yeah, totally understand that. But as you said, it all depends on the risk appetite of the investor. So basically, from my acquaintances, even people who have the high appetite for the risks and they understand that they can invest in venture equity deals or private equity or any other startups on their different stages, they all understand that they need some kind of the safe harbor where they can just invest and understand that, hey, when everything goes not according to plan, or if everything goes not according to plan, I need to have some safe sum of money or the safe assets where I can go to, and it doesn't affect my level of living. It doesn't affect my family. It doesn't affect my goals and my strivings because I do not need to survive in this case. And that's why most people try to diversify. And my question is connected to this as well. So basically, when we see these Fed rate hikes and all this transferring of the liquidity from private markets to the real estate, I think more and more people just buy the real estate in Dubai, and the market can be, in most cases, quite competitive right now. And do you see any changes in the strategy of the market, in the different approaches, in the liquidity, in the maybe volatility as well, and the prices due to all this increasing number of investments and the increasing number of customers which are interested in purchasing the real estate in Dubai?
Certainly. So, if I have to put it this way, today the federal and the ECB rates and the mortgage rates have almost doubled in many markets. When I say many markets, we are talking about Europe in 2022, which went through a huge soar in the mortgage prices and interest rates, which also was a trigger for most of these investors, European-based investors, to consider Dubai. And Dubai has been giving very attractive investment opportunities, including the golden visa, where one gets residency through investing in Dubai real estate. And also, historically, we know the Europe and the North American market is more on the mortgage buyers' end. They always tend to invest in real estate using the mortgages from the bank. They take the aid of the financial institutions, wherein Dubai is a cash market. Today, people invest in projects that are under construction, and the emotional confidence it gives for these investors, especially in Dubai, is on a different level. Now, let me tell you why. Excuse me. See, when you lease an apartment or a townhouse in Dubai, right? Excuse me about it. Let me give you an example, right? So when you lease out your apartment or your townhouse in Dubai, you're often paid the entire year's rental in advance, which is very important because there's no month to month uncertainty, unlike the North America or the Europe, where you will have to keep checking your bank balance on the first of every month. Did my rental income come into my bank account? Because here in Dubai, it is a year-long contract and you get paid upfront before the tenant moves in. So this lease is locked in for a full year. However, if you compare you investing in the stocks, you're constantly looking to see, is there a dip? Is there a increase or a spike in the market? You're constantly on your phone on an hourly basis or on a daily basis, fearing, is my investment safe? Am I making that profits for investing in this asset class, right? And also you wait for an exit. For example, a public equity locks you in for 5 to 7 years or 10 years, where your exit strategy completely depends on the market situation. However, Dubai real estate gives investors something rare: a certainty in cash flow and a predictability in tenure. And this is not just financial stability, it is more emotional. Like
Yeah.
basically, you sleep better when your asset is earning, occupied, and secured. And also to address the other question, how is this impacting real estate demand in Dubai? Right now, as I mentioned, Dubai is a cash-based market. So this is built on liquidity and not leverage, right? So there's less panic when the rates rise, and there's less speculation on debt and more end user strength. And that is why Dubai didn't freeze like other markets in 2022 or during COVID, right? Now, this is more on understanding where our assets or our investments are performing better, because you do not put all your eggs in one basket. And Dubai real estate has now become the key asset class for people to diversify their investments. And today we are mid-April, and so far 110 billion dirhams, which is roughly 30 billion dollars invested in Dubai real estate in the last 3.5 months. And that is your answer on how Dubai is performing given all these uncertainties in the market.
Yeah, that's a quite fascinating numbers if we look through different asset classes, etc. And I truly agree with you that it's more stable. And there is the quote that while you in some investment approaches you can purchase the cash flow, so how much money you need to purchase the cash flow. And this is the same situation in the real estate, as you said, that you have the year contract and you have already purchased the cash flow. If we compare in the private market, which I'm dealing with, and when I invest in business, I understand that okay, I invest in some initial sum of the money or the purchase the business, and I need to some kind of discount the revenues up to uncertain points and uncertain periods. I cannot be sure that this revenue will sustain for this time at that level, or at least I'm interested to scale the company on a higher level. So I'm interested to increase that. And this is the same for the stock market. So basically, it's like Buffett says, no one can predict the market. No one knows how it will perform. But this is the pure thing, as we talked about risk appetite recently. So if people are okay with that and they will okay with being in uncertain situation, it's fine. But for most people who have some kind of the interest and more understanding of the stability, purchasing the cash flow is really interesting thing. And my question here is more about the prices and the contracts, because you told that of course you can purchase and sign the contract for the 1 year for the property and receive and pay the whole money, the whole price for this period. And does the price reflect the spikes or maybe some variations in the price in the economic trends already in this rent price, or it can some kind of be adjusted based on the year basis, or the seller already understands that okay, I need to calculate the price in a certain way that I can be with a little risks here. So what's the approach here for most investors in Dubai and most sellers?
Most investors in Dubai or outside Dubai, international investors who are considering to invest in Dubai, most of the investors are buying into pre-construction phase properties. For one reason, Dubai, you could get a prime location, a prime property for 600 to $900 per square foot, compared to other cities like New York or London or Singapore or Monaco or Berlin or even Mumbai in India or Brisbane and Sydney for that matter. These are the major real estate investment hubs. And considering the market rates per square foot on all these comparable cities, Dubai is 40 to 50% cheaper. And these are locations that are downtown, Dubai Marina, Palm Jumeirah, all the major attractions and the major hubs for
Yeah.
business and residential communities, right? Now, having said that, the approach of the investors is today they're buying into a pre-construction phase project. They're not investing their entire fund. For example, if an apartment is $1 million, for example, they do not have to pay the $1 million as they buy in London or in New York. Because it is construction, it's pre-construction, you will be paying in installments, or you would be paying in parts, where you have a fixed payment plan where every quarter or every half yearly you would be paying 10% or 15% or 20%. So what does this translate to an investor is he is able to work out his cash flow, his money flow, and understand, okay, this is where my financials are. Every 6 months, I can afford to pay 10% of the property value. And most of the properties today in Dubai, which are under the pre-construction phase, do not ask you to pay the entire 100% during the construction. So you pay 60% to 80% during the construction, and the remaining 20% to 40% you pay when your property is handing over. So when your property is handing over, for an investor who has paid 60%, he has an opportunity to pay the entire 40% in capital and take possession and put it for rental yield.
Yeah.
Or he could also seek the help of the bank or take a mortgage from the financial institutions. And Dubai, which is governed by the Sharia law, your interest rates are very competitive compared to most of these major cities like Paris or London or Berlin or any other European and Asian city.
Okay.
So this way, investing in Dubai pre-construction phase projects not only gives a financial freedom to the investor, because he is able to use the rest of the capital that he has decided to invest into other asset classes that will generate his cash flow.
Yeah.
And when he's investing in a pre-construction phase project, he's also securing the project at a very lower price per square footage. So by the time of handover, he has a clear itinerary of how his cash flow is going to happen. And also he's able to use the remaining fund in diversifying into other asset classes during the period of construction. Now, tell me, if this is not attractive for investors, I don't know what other asset classes are this flexible and gives a clear roadmap to your investment.
Yeah, I totally agree. So basically, especially when you purchase the real estate in the beginning and you have not paid the full price yet, but and you can just split the portfolio money into that. And as you said, it is cheaper than European or American or any other real estate markets. So basically, the prices are already inflation and this recession adjusted, if I understood correctly. So basically, when the construction will be finished, when the construction is finished, so there will be probably increasing the price, but the price can be competitive on the competitive level. And I have the slightly different questions in terms of the Dubai in general, because we all know these, and probably some of the audience also know about the Dubai plan for the development, and that it is expected to have more people in a population in this area. And from your point of view, how this can affect the real estate market, not in terms of the revenues, because we cannot predict that, but in terms of the maybe rental units or maybe the number of buildings, is it any changes with that? Do you think that there will be more buildings which are built, or can you walk us through this as well, please?
Of course. Now, Dubai's population currently is at 3.8 million as we speak today, and the expected growth in population by end of 2025 is going to be 4 million in just Dubai. I'm not talking about UAE, I'm just talking about Dubai. We are going to have 4 million residents in Dubai by the end of 2025. And the projected value for 2040 is 7 million, which is doubling the current population. So if you cannot have the right infrastructure, you are going to face a huge demand. So all these new projects that are commenced and are under constructions is going to grow in number because there's only a certain number of units that can be given as output every year. We cannot have 150, 200,000 units that can be delivered on a yearly basis. That is physically not possible, right? Now, if you cannot grow by, say, 2 million residents and you do not see a housing demand surge, then what will make Dubai special? It's not just the growth, right? It is a strategic growth. So today we are going to see a lot of families and digital nomads and entrepreneurs and startups that are coming towards Dubai, and that is what is giving the increase in population and gives the government to plan strategically for the growth that is expected in the next 10 to 15 years, correct? So the master plans of Dubai are solid. And we thought, okay, the demand will be less, so we can move in a steady pace. But today, what we are experiencing in the last 2 years is the demand is moving faster than we can deliver the supply. So this was totally unexpected in Dubai, which only means there's opportunity, especially in segments like mid-market housing and suburban villas is where the real opportunity for an investor lies. Because this city is not expanding one way, it is expanding both horizontally and vertically. So smart investors are getting in ahead of this infrastructure curve where the capital appreciation is going to outperform any other asset class in the given current situation based on how the population is rising.
Yeah, got it. Very interesting approach, and we all know that it is official. So basically, you can go on the different websites of the government and look through these documents about the plans and about the numbers. It's all proved by the statistics, but we'll see how this goes. And but most people, I understand, that very optimistic about the situation and about the future. And you mentioned some different types of real estate which can be popular and are in high demand right now. And my question is, do you see that these are only types of real estate that are worth seeing or worth considering about the investment, or what are any other types of real estates which the investor who is interested might be looking at as well?
See, there are two key segments that today we can look at in Dubai as real estate investment. And one is mid-income rental apartments, branded residences, and waterfront properties, and also high-end villas and townhouses.
Yeah.
And the second one is investing in the commercial aspects or commercial real estate front. Because today, as much as the business grows, or the population grows, the businesses are also establishing newer offices and
Yeah.
newer workspaces, which means equally we need commercial real estate development as well. So currently, investing in commercial real estate, be it warehouses or be it office spaces or retail spaces, is also a key market or a key asset class that real estate investors considering Dubai should look at. However, the general demand is to first fulfill the rise in population and housing for these rise in population. So, like any other market, Dubai has both the residential and the commercial growing side by side. So, it's a very good opportunity and a good strategy for investors to consider both residential and commercial investments, especially retail space investments.
Got it. And my question more now in terms of the geographies, because when I compare it to private equity and public equity, basically there are no borders. So right now I'm in search for deals in London, in Britain, in Europe, across the Europe, in the United States, in Australia and Canada. And when you do the public equity deals, the sky is the limit basically because there are almost 50,000 stocks on the market. But when we speak about the real estate, it is tied into the specific location. And if I speak about the Dubai, do you see any promising locations which are worth seeing as well, besides the types of investments? And probably this can help the foreign investors and the investors in general.
So there is one key location that has created a lot of attraction given its strategic location. It is called Dubai South. It's called Dubai South because it's in the southern part of Dubai. And this is where the brand new airport, the Al Maktoum Airport, that is going to be operational by 2033. Now, when it gets operational, it is going to handle 200 million passengers in a year. And currently, Dubai Airport is handling 90 million passengers a year. And when the second and the brand new airport is going to be operational, it is going to double the volume of passengers it is going to handle. Now, the location close to Dubai Airport, the new Dubai Airport, is called Dubai South, and that is where all the future developments are going to happen. Now, by 2035, we are expecting 1 million residents in Dubai South as a location. So
That's
just
fantastic.
the comparison of the number of people and the infrastructure development, like a brand new airport, which is again going to be the world's largest airport, you could clearly see that is a location worth investing for long-term players, people who would like to invest today and wait for 10, 12 years and see the best in their capital appreciation. Dubai South is a very key location to consider. And then for luxury waterfront developments, we have Palm Jebel Ali, which is the second version of Palm Jumeirah, and it is twice in size of Palm Jumeirah.
Got it.
Now, and we have very limited water frontage in all of Dubai. We have less than 80 kilometers of water frontage and waterfront, communities. And there are no more waterfront communities that can be developed in the future. So any investments towards a waterfront community, especially an island-based community like Dubai Islands or Palm Jumeirah, is a great luxury investment. Again, we are looking at 7 to 12 years of appreciation period and
Yeah.
wait period, but that is a very key location for luxury investors. And the other location that we are currently looking at is off Dubai
Mhm.
called Ras Al Khaimah.
Yeah.
And that is where UAE's first ever casino, which is built by the Wind Resorts and Group, they are launching their first ever casino in the UAE, in fact, in the entire GCC. Now, that's an island-based project with water frontage, and
Yeah.
that is a great community to look at if people are diversifying into hospitality-based real estate investments. Because a lot of, tourism is going to happen, and a lot of tourism-based travel is going to be attracted in the
Yeah.
casino area, and that is a location that people should consider currently.
Yeah, that's a really interesting point, which you mentioned that there will be the first casino in the United Arab Emirates, and particularly in Dubai. And my question is connected more with it as well. So, do you think that building this casino and the whole area around it will create some kind of the casino effect and or casino situation like in Las Vegas, where you have the multiple locations and the multiple tourist attractions, and people just come to these places? But in this case, the Dubai can be the luxury Las Vegas because the level is obviously higher here. And what are your thoughts about that with this particular situation?
Eugene, it is just the beginning. And then when you say the casino effect, it is just the beginning and it is not going to stop in just Ras Al Khaimah. It is going to elevate the tourism, the F&B and hospitality linked real estate across UAE. Now, this isn't just about casinos, it's also about global entertainment, and Dubai or Ras Al Khaimah or UAE being the global entertainment capital of the world. And this we can also expect hotel REITs, the REITs, and short-term rental zones and tourism corridors to boom out of proportion. Now, will this be a trigger for casino effects similar to Las Vegas? If I have to tell you in an example, say if Russell Khaimah becomes the Las Vegas, then Dubai will become the Beverly Hills, which is next door. So investors should position in waterfront, leisure, and hospitality zones. And also, it's not just about gaming, it's about gravity. Now, excuse me, tourism will surge, and of course the lifestyle real estate is going to completely ride on that wave. So the smart money is already looking at adjacent plays in Dubai and Abu Dhabi apart from Ras Al Khaimah, and that is the casino effect that we have already started seeing in UAE, and it is only to continue further, and it is just the beginning, as I
So
said.
you're basically thinking that there will be other casinos, either in this area or different areas, so it can create some kind of the territory where all the tourists and all people who are looking for entertainment come and spend their money and and buy real estate as well, right?
Exactly. Say, I'll give you a real life experience. Now, Ras Al Khaimah is one of the Emirates because Dubai, UAE has seven Emirates, and Dubai is one of the Emirates, and Ras Al Khaimah is the other one. And you also have Al Quwain, Abu Dhabi, Fujairah, and others, right? Now, Ras Al Khaimah is the first
Yeah.
Emirate to bring in the Wind Resort. However, there are already talks in Abu Dhabi by another major casino player to secure gaming license. And the emirate that is between Dubai and Ras Al Khaimah called Al Quwain, the government has given a contract to one of the top developers in Dubai called Shoba Developers. And they have given a huge piece of natural island to create hospitality backed real estate. Now, Al Quwain is not a famous emirate like Dubai, Abu Dhabi, or Ras Al Khaimah for the fact
Can you invest
people
in this type of property as well?
exactly. People do not look at Al Quwain as a viable investment opportunity. But today, because of the Wind Resort coming up in Ras Al Khaimah, another emirate is creating a completely waterfront, natural island living, and it's millions of square foot of natural islands. Now, that is something very rare because we do not have many natural islands in UAE. And a government coming up with a private partnership with a top tier developer like Shoba and transforming a natural island to a hospitality based investment, real estate development is purely based on the casino that is coming in Ras Al Khaimah. So we are only going to see this effect follow through. And this is an investment opportunity for your investors who are considering to invest in hospitality led projects, which will be benefited by the introduction of the Wynn Casino today in Ras Al Khaimah.
Yeah. Yeah, I think it will be a great opportunity. And if anyone who is listening or watching this podcast is interested, I will put the contact information about me and George as well. So you can free contact and ask all the details about the projects, about the upcoming opportunities. And this can be really huge and interesting part because we all know these online casinos in Las Vegas, and in most cases, it can be a great investment if you invest in the real estate in the beginning of Las Vegas. Why not?
Exactly.
Yeah, but anyway, these are also the plans and also like the official information because we tried to prepare this information for the episode from the official resources. And my question to George, can you give some pieces of advice in terms of the books, the articles, and maybe some valuable resources where our audience can look through and read and watch in terms of understanding and better understanding the situation in the Dubai and in the United Arab Emirates in terms of the laws, the investment options, and something similar connecting to the real estate.
Of course. So if you want to really understand on how a city or an urban planning is done, there are books by Jane Jacobs and Nassim Taleb, where you could understand how cities breathe, basically, and how cities are planned and what is the vision behind building urban development. And also, if you would like to understand more on capital flows and how money would work, you could try Ray Dalio. He's a wonderful author that I love, and his ideas have helped me to see real estate as more than just buildings and look at it as a system. And also, I'm influenced by thinkers who merge humanity with economics, like Peter Drucker, Howard Marks, and even Elon Musk to an extent, because they look at how capital can shape people's lives and not just portfolio. Now, these are people that I follow and I read, and I would recommend them because they are thought provoking. They open up your horizon to see money, capital, cities, real estate in a different light, which helps you to evaluate and predict the future development of a city like Dubai and understand, hey, this is where I should enter into this game so I could be a better investor. And I'm happy to share these names, and I would like to learn more from the viewers as well.
Yeah, sure. We will put the links for these books and the resources in the description if anyone is interested. And we'll also read all the comments. If you guys have any ideas or questions, we'll look through them and try to answer as quickly as possible. And yeah, thank you so much, George, for your time. It was a fascinating talk about the real estate because it's still evolving and there are a lot of opportunities here. And I think there will be even more opportunities in the future. And yeah, maybe any final words for our listeners and viewers as well.
Firstly, thank you very much, Eugene, once again for having me on this podcast. I enjoy having these conversations with you and learn so much about the global investors and the kind of investors that you work with. And today, if I have to give in a word, in a world full of volatility, right? Dubai offers stability, yield, and a future-proof lifestyle. Now, what this combines is a rare and an increasingly irresistible opportunity for investors who are looking to diversify their portfolio in a very unprecedented and uncertain economic world. So, with a lot of clarity and a lot of strength towards investing in Dubai real estate, being a dollar peg currency, or having a very strong infrastructure growth, visionary leader, and of course, brilliant tax benefits. Dubai is one few places where economics and emotions align. So I would be very happy to help our viewers and your investors to help them navigate this city and the real estate investments to their satisfaction and their objective. So once again, thank you very much for your time, Eugene. And it's been an absolute pleasure talking to you and the viewers.
Yeah, me
Thank
too.
you.
Thank you so much for your time. And for our viewers and listeners, thank you for being with us. If you have any additional questions or ideas, please leave them in the comment section in any social media because we post in multiple of them. And thank you so much one more time, George. And we will see you soon, hopefully in the next podcast episodes, if you're okay with that.
Thank you very much, Eugene, once again. And yes, looking forward to many more podcasts. Have a good
Thank
day.
you. Bye,
Thank you.
everyone.
Bye.
That's all for today, guys. I hope you really enjoyed the episode and found it useful. Don't forget to subscribe for more. Check out numphin.com and see you next time.